Hello, hi guys. This is CA Balakrishna from lecturepedia.in. How are you? Hope you people are doing well. Even I am fantastic. In the previous class, we have discussed appointment and remuneration of managerial personnel, right? Uh, while starting this series, that is the Fastrack classes on SPOM set A Companies Act, I have told you that the first three chapters they will be dealing with directors. So the first two chapters related to the directors we have completed in the previous two classes. Now in this class we will be discussing third chapter with respect to the directors. Once this chapter gets completed, the chapters that are related to the directors they'll get completed. Okay, now this third chapter, it is related to meetings of board and its powers. I have already told you, board means all the directors taken together, we'll call them as board of directors or board. Now this chapter will contain provisions with respect to the meetings of board of directors, like how many times the directors have to meet every year, and what is the quorum for board meeting, and we'll also having powers of board of directors, various powers that the board of directors are having. Okay, these aspects will be covered in this chapter. Now if you see here in this chapter, we will be discussing sections from section number 173 to section number 193. That is, in total 20 sections we will be discussing. Okay, section number 173 to section number 193. Now if you see, you can easily remember the names of the sections of this chapter, because I have grouped them in such a way that you can easily remember that. Now if you see, the first group of sections are related to the board meetings. You have three sections. Section number 173, which deals with board meeting and notice for the board meeting. Section number 174, which deals with quorum for meeting of board. And section number 175, which deals with resolution by circulation. You can call it as RBC. So these three sections are related to the board meeting. Now I guess you already know, in order to take decisions with respect to the company, board of directors will conduct board meeting. In this board meeting, various decisions, business decisions of the company will be taken. Okay, board meeting is related to the board of directors, general meeting is related to the shareholders. Hope you already know that point. In this chapter we will be discussing about board meetings, not the general meeting. Okay, next set of sections are related to the committees. Now you will be having audit committee, nomination remuneration committee, stakeholder relationship committee, like this various committees are there. So section number 177 deals with audit committee. Section number 178 deals with nomination and remuneration committee. In this we will also be discussing about SRC, that is stakeholder relationship committee. Next set of sections related to the powers. Section number 179 deals with powers of board meeting. Section number 180 deals with restrictions on powers of board. Now if you see, 179 deals with powers of board meeting. That means decisions that must be taken by directors only. Section 180 deals with restrictions on powers of board. That means these decisions of section 180 cannot be taken by board. That means they shall be taken by shareholders in the general meeting. So another name for section 180 can be powers of general meeting. Okay, next sections related to the contributions or donations, you can call. Section number 181 deals with charitable contributions. Okay, donations that the company make to the charitable purposes. What are the limits? What is the maximum amount of charitable contribution that the company can make? What are the approvals required? All that we will be discussing in section number 181. Section number 182 is with political contribution, that is donations to the political parties. Section number 183 is defense contribution, donations to the defense of India. So these three sections, 181, 182, 183, they deal with contributions. And finally, miscellaneous provisions. These miscellaneous provisions, section 185 deals with loans to board of directors, 186 deals with loans and investments to others, and section 187 deals with register of section 186. Okay, under section 186, loans and investments will be made by the company, right? That register has to be maintained as per section 187. Section 188 deals with related party transaction, section 189 with register of section 188, and section 190 with contract of employment with managing director and whole time director. Okay, basically the contract of employment with managing director and the whole time director, it should be in the written format. Okay, if it is not in the written format, you have to write down the terms and conditions in a memorandum that we'll be discussing in section number 190. And section number 192, payment to directors for loss of office. Now if you remember, section number 202 we have discussed in the second chapter, where we have discussed about compensation for loss of office to the managerial personnel. That means for loss of office, you will pay compensation to the managing director, whole time director, as per section 202. And for other directors, you will pay compensation for loss of office as per section 191. Hope that is clear. That is the difference between section 191 and section 202. Next, section 192 deals with restrictions on non-cash transactions. 193 deals with contract by one person company. So this is the list of sections that we are going to discuss in this chapter. Hope that is clear. Okay. Yeah. So starting with the first section, that is section number 173. Section number 173. Meetings of board. Section number 173 deals with meetings of board. Now, how many board meetings should be conducted by a company? You can categorize it into two parts. The first board meeting of the company, that means the first board meeting that the company conducts after incorporation is that will be calling as a first board meeting. So the first board meeting of the company must be conducted within 30 days from the date of incorporation. Okay, so the first board meeting should be conducted within 30 days of the date of incorporation. Next, subsequent board meetings. Now the company has to conduct the subsequent board meetings in such a way that it will conduct at least 4 board meetings in every calendar year. Okay, you should underline this word calendar year, not financial year. That means from 1st January to 31st December, in this period the company should conduct at least 4 board meetings, and it should also take care that the gap between 2 board meetings is not more than 120 days. Okay, this is with respect to the subsequent board meetings. Subsequent board meeting, 4 board meeting in every calendar year, not the financial year. That means you need to check this requirement from January to December, not from April to March. Okay, and gap between 2 board meetings is not more than 120 days. Okay, the gap between 2 board meetings should not exceed 120 days. Hope that is clear. Another important point, note gap between last board meeting of previous calendar year and the first board meeting of current calendar year should also not exceed 120 days. What is this point? See, in the year 2024, that means from January 2024 to December 2024, in this period company has to conduct 4 board meetings, and the gap between 2 board meetings should not be more than 120 days. Another point is the last board meeting of the previous year, that means in this year the last board meeting, and gap between the first board meeting of the current year in the 2025 January to December also company need to conduct 4 board meetings, right? Now the gap between last board meeting of the last year and the first board meeting of this year should not be more than 120 days. Hope that is clear. So hope you are clear with this point. Next, now company is conducting the board meeting. Who will attend to the board meeting? Obviously board of directors will attend the board meeting. Now company has to invite the board of directors. Without invitation, why will they come? So first of all, the company has to invite the board of directors to the board meeting, right? Only if there is an invitation they will come. Without invitation, why will they come? So notice of board meeting must be given by the company to the board of directors. What is the time limit within which this notice of board meeting has to be given? At least 7 days before the meeting you need to give board meeting notice to the directors. Okay, see, notice of board meeting to the directors, generally not less than 7 days notice has to be given to the board of directors. Hope this is clear. Now whether shorter notice is possible, okay, Companies Act says is you have to send board meeting notice to the board of directors at least 7 days prior to the board meeting. Now in some situations, in order to discuss certain urgent matters, it might be necessary for the company to discuss or to make a decision on some urgent matter. Now to make a decision, it has to call the board meeting. Now in order to call board meeting, there is a requirement of notice of at least 7 days, but this matter is very much urgent. In such situations you can give shorter notice also, okay, you can call the board meeting by giving a shorter notice of 1 day or 2 days, that is shorter notice of less than 7 days is also possible, provided for such board meeting which has been called at such shorter notice, at least one independent director must attend. Okay, see, shorter notice to discuss urgent business is possible, provided it can be called, provided at least one independent director must attend such meeting. Now company has called the board meeting at a shorter notice of less than 7 days. For such board meeting, at least one independent director must attend because it is a meeting at shorter notice. Now what if at least one independent director has not attended? Now if at least one independent director has not attended for such shorter notice board meeting, see, in case at least one independent director is not attended for such meeting, then resolution passed at such meeting shall be circulated to all the directors and be ratified by at least one independent director. See, board meeting has been called at shorter notice. Now for this board meeting, at least one independent director also not attended, and at this meeting a resolution has been passed. Resolution means a particular decision has been taken with respect to particular matter. So a resolution has been passed, and for this one independent director also not attended. In this situation, you need to circulate, you need to send this resolution to all directors of the company, and this resolution should be ratified by at least one independent director in order to make it valid. Okay, so now the general rule is, in order to call a board meeting, at least notice of 7 days has to be given. To discuss urgent business, a shorter notice also can be given. In case if you give a shorter notice, in order to make such board meeting valid, at least one independent director must attend. If one independent director has also not attended, then the resolution that you have passed at the board meeting, which has been called at a shorter notice, must be circulated to all the directors, and such resolution must be ratified by at least one independent director. Hope this is clear. Now, once the notice of a board meeting has been given to the director, director can attend the board meeting either in person, that is physically he can attend, or if video conferencing option is available, he can attend the board meeting through video conferencing. However, this video conferencing is not mandatory. Okay, if company provides a video conferencing facility, board of directors can utilize it. If company doesn't provide video conferencing facility, then board of directors cannot utilize it. It is not mandatory on the company to provide this video conferencing facility. Hope that is clear. Or other audio visual means, director can also attend the board meeting through other audio visual means. So through these three ways, director can attend the board meeting. Now, there is a exemption granted from this section of conducting 4 board meetings in every calendar year. To whom this exemption is given? Exemption is given to one-person company, small company, dormant company, a private company which is a startup. So these 4 companies need not comply with the requirement of conducting at least 4 board meetings in every calendar year. Instead of that, it is sufficient if these companies conduct at least one board meeting in each half of the calendar year. That is, for first half of the calendar year there should be one board meeting, and for second half of the calendar year there should be another board meeting, and gap between 2 meetings is not less than 90 days. They have to ensure that the gap between 2 meetings is not less than 90 days. Earlier, for normal companies, the gap between 2 board meetings should not exceed 120 days. Here it should not be less than 90 days. Okay, and for section 8 companies, it will be sufficient if they conduct at least one board meeting in every 6 calendar months. Okay, mostly both the points are same, but the terminology that they have used is different. Okay, here they have told one board meeting in each half of the calendar year. In the second point, they have told in every 6 calendar months. Okay, that is section number 173, which is with respect to the meetings of board of directors. Okay, how many board meetings should be conducted, and what should be the time gap, and with respect to the notice of the board meeting. All these points we have discussed in section number 173, right? Now moving to section number 174, which deals with quorum for meeting of board. Now what is meant by quorum? Quorum is nothing but the minimum attendance that is required in order to start the board meeting. Okay, now company has called for the board meeting. In order to start that board meeting on that particular date, minimum number of directors should attend to start that board meeting. That is known as quorum. So what is the quorum for board meeting? Section 174 says about this. Quorum, generally speaking, 1/3 of total strength or 2 directors, whichever higher, is the quorum. That means, let's say company is having total 9 directors. Now quorum for this company is 1/3 of 9, which becomes 3, or 2 directors, whichever is higher. That means 3 will become the quorum. Next, let's say there is another company which is having only 3 directors. Now quorum for this company is 1/3 of total 1 or 2, whichever is higher. Here 2 becomes the quorum. Hope this is clear. So generally 1/3 of the total directors or 2 directors, whichever is higher must be the quorum. Hope that is clear. Next, section 8 companies. In case of section 8 companies, quorum to start the board meeting is 8 directors or 25% of the total directors, whichever is lower will become the quorum. Okay, let's say the company, section 8 company is having some 10 directors. Now, of these 10 directors, 25% becomes 2.5, which means 3 directors or 8 directors, whichever is lower, that means 3 is the lower. So quorum for this company is 3. Hope that is clear. Let's say the section 8 company is having 4 directors. Now 25% of 4 becomes 1 director or 8, whichever is lower. Which becomes lower? 1 becomes lower. Now quorum for this company is 1. No, at least 2 is the quorum. See, not less than 2. Okay, if at all it is more than 2, then lower of both you can apply. But if you get less than 2, at least 2 should be the quorum. Okay, here you got 1 which is less than 2, so not less than 2, that means 2 directors will become the quorum here in case of section 8 company. Next, exception. What is the exception? If interested directors are more than 2/3, then the balance uninterested director shall be the quorum, provided not less than 2. What is this concept of interested director? Now, there is a company. This company is having 6 directors, or let's say this company is having 9 directors, in order to easily understand. This company is having 9 directors. Now calculate quorum for this company. 1/3 of 9 directors, which is 3 or 2, whichever is higher, 3 becomes higher. So the quorum for this company is 3. But in this board meeting which the company is going to conduct, they are going to take a decision with respect to a particular contract. Okay, contract related to what? Let's say company wanted to purchase some raw material worth 50 crore from B Limited. Okay, now B Limited is owned by Mr. B. Mr. B is some director, or Mr. B is having some shares in the B Limited. Okay, somehow Mr. B is interested, or let's say not Mr. B. There are total 9 directors now in this company. Of these 9 directors, 7 directors, okay, 7 directors are interested in B Limited. That means they are either having shares in B Limited or they are directors of B Limited. Okay, some way or the other, 7 directors of total 9 directors are interested in B Limited. Now, since 7 directors are interested in this resolution, they should not participate in this board meeting for taking such a decision. Why? Because they are interested directors. It might be possible that they will take decision in favor of them. Okay, it might be possible that the company's interest might be lost, right? These 7 directors, they might take decision beneficial to themselves instead of taking decision beneficial to the company. So in order to avoid this situation, what the Companies Act says is, if at all any director is interested in the resolution that is going to be passed, they should not participate in decision making of that resolution. So here 7 directors will not participate. So remaining, we are having only 2 directors. In this situation, actually, as per our calculation, quorum should be 3. But because of interested directors, remaining directors have become only 2. So in this situation, the remaining uninterested directors will be the quorum. Okay, if this number is that you got is less than 2, okay, if uninterested directors are less than 2, then also the quorum must be minimum 2. Okay, see, provided it should not be less than 2. Hope you are clear with this. Now coming to the concept of adjournment of meeting. First of all, what is meant by adjournment? Adjournment means postponement of the meeting or extension of meeting to some other day is known as adjournment. In which situations the board meeting can be adjourned? It can be adjourned in two situations. The first situation is required quorum has not received. Okay, let's say on 15th December company planned to conduct the board meeting. It has given the notice before 7 days only and everything is fine, but on 15th December the quorum has not received. Okay, let's say the quorum as per our calculation to start the meeting, quorum is, let's say, 5 directors. So minimum 5 directors should attend to start the meeting, but 5 directors have not attended. Okay, the quorum is not received. In this situation, what you will do? You will adjourn this meeting to the same day, same time, same place next week. Okay, you will adjourn this board meeting to the next week, same day, same time, same place. Okay, which should not be a national holiday. Okay, the day on which you are going to adjourn this board meeting should not be a national holiday like August 15th, Gandhi Jayanti, or any festival. Okay, so it should not be a national holiday. That is the first situation in which you will adjourn the board meeting. Second situation, you will adjourn the board meeting due to unfinished business. Let's say in the board meeting you decided to take decision with respect to certain 20 matters, or you can say 20 resolutions has to be passed at the board meeting, but by the time board meeting gets completed, only 15 resolutions have been passed. Still decision making with respect to 5 resolutions is pending. Okay, 5 resolutions pending. In this situation also, what you will do? You will adjourn the board meeting, right? You will adjourn the board meeting to next week, same day, same place, same time. Hope that is clear. Now this section is not applicable to one person company. Okay, this provision with respect to the quorum is not applicable to one person company. That means in case of one person company, you can start your board meeting even with one director also, because in most of the one person company there will be one director only. Okay, so for one person companies, this quorum requirement under section 174 is not applicable. Hope that is clear. Next, section number 175, which is with respect to passing resolution by circulation. You can call it as RBC, which is resolution by circulation. Now what is this concept of resolution by circulation? Now in order to pass any resolution, that is in order to take any decision, the board of directors have to conduct a board meeting, right? All the directors have to attend the board meeting. Now conducting board meeting involves certain expenditure. Okay, you have to take certain place on rent first of all, or you can conduct in your office itself, and board of directors from various places, they have to come to the board meeting, so traveling expenditure involved. If they come from some other city, even the lodging should also be stay should also be arranged for those board of directors, so again expenditure is involved, and the food should be arranged for the board of directors, again expenditure is involved. So conducting board meeting involves certain expenditure. Now for taking each and decision, for taking each and every decision, if you keep on conducting these board meetings, lot of cost will be involved on part of company. So in order to reduce this cost, what the company can do is some resolutions where company cannot conduct board meetings. Like let's say 10 days back itself, company has conducted a board meeting. In that board meeting, almost all the resolutions are passed, but some 3 resolutions company missed to pass. Okay, with respect to 3 items, company missed to take approval of board of directors. So in this situation, instead of again conducting the board meeting, because board meeting will involve a lot of cost, what the company can do is company can pass these resolutions by using section 175, that is resolution by circulation. What will happen in this? Requirements to pass resolution by circulation. First of all, this resolution is there na, it will be circulated to all the directors. Okay, either through post or through email. You can circulate this resolution copies to all the directors at their registered addresses. Okay, at their addresses, by hand or by post or through electronic mode, that is through email. You can send these uh, resolution copies to the board of directors, and these resolutions will be approved by majority of directors. Okay, if majority of directors agree to these resolutions, then it will be deemed that this resolution has been passed. Now if you see, in this situation, no physical meeting has been conducted. The resolution has been circulated to all the directors through electronic mode or physical or post. And if majority of directors, that means if let's say there are total 10 directors, of 10 directors majority is 6, if 6 directors approve the resolution, it will be deemed that the resolution is passed. So this is known as resolution by circulation. Okay, so since majority of directors have approved, it will be passed. Now since this resolution has been passed by way of circulation, what the act says is, this type of resolutions which have been passed by circulations, you need to note down them in the, see, note such resolutions passed in the minutes of the next board meeting. Okay, now you have passed some resolutions by way of resolution by circulations. You need to note down these resolutions which you have passed by circulations in the minutes of the next board meeting. Okay, for the purpose of uh, documentation. Okay, and in the next board meeting, if at least 1/3 of the total directors request to put such resolution for the discussion again in the board meeting, then such resolution must be put for discussion again. Okay, see, let me tell you, company has passed a particular resolution by way of resolution by circulation, RBC, on particular day. This will be noted down in the minutes of next board meeting. Okay, now in this board meeting, if 1/3 of total directors asks the company, there is one particular resolution which you have passed by way of resolution by circulation. Now we wanted to discuss that resolution. Okay, you have passed it by way of circulation, so we were not able to properly put our thoughts. So now you again get that resolution before us for decision making, so that we will discuss among ourselves and we can take a decision. If at least 1/3 of directors requests this, company must put this resolution again in this board meeting for approval. Okay, now again board of directors will discuss about this resolution, about this decision, and if they want, they will approve it or they will again reject it. Hope this is clear. So this is the resolution by circulation. I hope you understood it. Hello, hi guys. If you're watching this class till this point of time, I guess you thoroughly liked this class. Now I'm having an exciting news for you people. We're also having CFNL audit classes available with us, and in these audit classes we have discussed all the concepts with the help of lively PowerPoint presentations. I'll just show you those PowerPoint presentations. If you see, this is a PPT for digital audit and assurance. You can find the lively images for each concept. Okay, based on the concept I have given images for the in the PowerPoint presentation, and these same images you will also find in our color book that you will be getting. If you see, this is the PowerPoint presentation for SA 299. Okay, based on the concept I have designed the PowerPoint presentations. Just by seeing that image you can easily remember the concept. So with the help of these PPTs we will be discussing in our classes, and this is the PPT for SDG and ESG. You can see how lively the PPTs are. I'll also show you the books that you will be receiving. If you see the same images that you have seen in the PowerPoint presentation, you can find here in our book. So the same image you will find, and these books, they are completely color books, and you can also find the important terms, the key terms highlighted in red. Okay, in the entire big book you will find the key terms highlighted in red, and also if any concept is important, here I have given important marking. So this is the concept book that you will be receiving, which is completely a color book, you can see. Okay, so like this the concept book you will receive, and also question bank you will receive. Even the question bank is also a color book. So mostly you will not find question bank in color anywhere, but we are giving even the question bank in the color. Okay, so these books, and these books you will receive along with the classes. So if you want to purchase the CA final audit classes, you can visit our website lecturepedia.in and you can place your order. Now you can continue watching your class. Now moving to section number 177. This section number 177, it deals with audit committee and Vigil mechanism. Now what is this audit committee? Basically, if you see in the company, there can be various committees that can be created, like audit committee, nomination and remuneration committee, stakeholder relationship committee. So board of directors, they cannot manage all the activities, right? So certain specific activities can be delegated to these committees. That is the purpose of this audit committee. So one such committee is audit committee under section 177. So first of all, which companies have to mandatorily appoint audit committee? First of all the listed companies has to mandatorily appoint a audit committee, and unlisted public companies having paid up share capital of 10 crore or more, or turnover of 100 crore or more, or outstanding loans, debentures and deposits of more than or equal to 50 crores. If any one of these condition is satisfied, then such unlisted public company must have audit committee. Okay, now the unlisted public company, if it meets any of these conditions, then for the next 3 years it has to appoint the audit committee. Okay, even though in the next 3 years the condition has not been met, since it has been met in the first year, for the next 3 years it has to appoint the audit committee. However, in the 3 years consecutively it doesn't meet the condition, then again it can stop having the audit committee. See, if these conditions not satisfied for 3 consecutive years, then not required to constitute audit committee. Okay, if these conditions are met once, then for next 3 years it has to appoint audit committee. If in such 3 consecutive years these conditions are not met, then from the next year it can stop having audit committee. And there has also been exemption given from appointing audit committee to certain types of companies. Let us see exemption from having audit committee. Unlisted companies which are joint venture companies, which are wholly owned subsidiary companies, and which are dormant companies. These 3 unlisted companies need not have audit committee. What are they? Joint venture companies, wholly owned subsidiary, dormant companies. Okay, these 3 companies, if they are unlisted, they need not have audit committee. If they are listed, obviously for all the listed entities, audit committee is mandatory. Okay. Next, composition of audit committee. Who has to be there? How many directors have to be there in the audit committee? Audit committee must have minimum 3 directors, of which majority should be independent directors. Okay, audit committee should have minimum 3 directors and majority of should be independent directors. Let's say audit committee is having 3 directors. Of this, majority should be independent, that is 2 should be independent. Let's say audit committee is having 6 directors. Of these, majority means 4 must be independent directors. Hope this is clear. So audit committee should have minimum 3 directors and of which majority should be independent directors. And however, for section 8 company, requirement of majority independent director is not applicable. Now, coming to the responsibilities of audit committee. What are the responsibilities of audit committee? We have seen applicability of audit committee, composition of audit committee. Now, what this audit committee will do? First of all, the name itself will suggest audit committee will recommend the appointment of auditors and will also recommend the remuneration that has to be paid to the auditors. See, recommendation for appointment and remuneration of auditors. This is the first activity that it will do. Next, it will review auditors' independence and performance. Audit committee will also review whether auditors are acting independently or not. It will also review the performance of the auditor. Okay. Next, audit committee will also review the financial statements and the audit report that has been given by the auditors. Okay. Next, audit committee will also scrutinize intercorporate loans and investments. If the company has made any investments in the subsidiaries or has given any loans to the intercorporate, that means subsidiary, associate, holding, then they will be known as intercorporate loans and deposits. Audit committee will review, will scrutinize these intercorporate loans and deposits. It will also monitor end use of funds raised through public offers. Now, by IPO or by further public offering, let's say company has raised 100 crores. By saying that company will use these 100 crores for constructing the factory. So, audit committee will check whether the end use of the funds is properly utilized or not for the actual purpose or not. This will be checked by the audit committee. Next, valuation of assets. Approval of related party transactions. This is also important. Okay, if company enters into any related party transactions, those related party transactions must be approved by the audit committee. Okay, in section number 188 we will be seeing who will be known as the related party, which transactions will be known as related party transactions, what approvals are required for entering the related party transactions. All that we will see in section number 188. But now you remember that one of the responsibility of the audit committee is to approve the related party transactions. Now, let's say the company is entering into the related party transactions frequently. Let's say purchase of goods. Company is frequently purchasing goods or raw material from Mr. C, who is relative for the company. Okay, throughout the year it is purchasing. Now, it will become difficult to take approval of audit committee for each and every transaction that you enter into Mr. C, because Mr. C is your relative and you will be entering into transaction with this relative throughout the year. So it becomes difficult to take approval for each and every transaction. In such a type of situations, there is a concept known as omnibus approval. So audit committee can give omnibus approval for this transaction. What is meant by omnibus approval? Under this omnibus approval, audit committee will give approval for all transactions entered with so and so person. It will specify with Mr. C, with Mr. D, okay, who are relatives. If company enters into transaction with that particular person, if audit committee wants, it can also specify a monetary limit of up to 50 lakh, then it will be deemed to be approved. Okay, these transactions are deemed to be approved by audit committee. This is known as omnibus approval. That means the entire approval will be given at the same time. Okay, and this omnibus approval's validity is for 1 year. Okay, once the audit committee gives omnibus approval for certain type of transaction, that approval will be valid for 1 year. After completion of 1 year, again it need to take the approval. Hope that is clear. So the validity of omnibus approval is 1 year. Can provide omnibus approval which shall be valid for a maximum of 1 financial year. So that is with respect to the audit committee. Now this audit committee is also having responsibility to manage Vigil mechanism in the company. So what is this Vigil mechanism? Basically Vigil mechanism is a complaint mechanism in the company. Okay, so this Vigil mechanism can be used by directors and employees to report genuine concerns. Under this Vigil mechanism, those concerns will be reported to audit committee. Audit committee will be the head. Okay, let's say in the company there is Mr. C who is a employee. He is committing certain fraud in the company. Okay, because of which there is certain loss of amount to the company. Mr. A has known this. Okay, Mr. A comes to know that Mr. C is committing certain fraud, which because of which company is incurring loss of certain amount. Now Mr. A can communicate this fact to the audit committee with the help of this Vigil mechanism. Okay, this is known as Vigil mechanism, wherein directors and employees can use this Vigil mechanism to communicate their genuine concerns to the audit committee. Audit committee will take the action based on the communications received or based on the complaints received. Hope that is clear. So which companies must have this Vigil mechanism applicability? First of all, listed company means obviously it should have a Vigil mechanism mandatorily. Next, companies accepting deposits from public. If the company is accepting any deposits from the public is involved, means it is a sensitive company. So such company should also have Vigil mechanism since public are involved. Next, if the company has borrowed money from banks and financial institution in excess of 50 crore. Okay, if the company has borrowed money from any financial institutions in excess of 50 crores, then also it should have a Vigil mechanism in its company. And this Vigil mechanism will be overseen by audit committee. Okay, audit committee will oversee the Vigil mechanism. Now let's say if in the company audit committee is not there, if audit committee is not there, then to oversee this Vigil mechanism, board of directors will nominate one director. Okay, one director will be nominated to oversee the Vigil mechanism if the company is not having audit committee. If the company is having audit committee, obviously audit committee will oversee the Vigil mechanism. Hope that is clear. And adequate safeguards should be implemented against victimization. What is this victimization? Now in our example, Mr. C is committing fraud, so Mr. A has communicated that Mr. C is committing fraud to the audit committee. So Mr. A has complained about Mr. C. Now in future, if Mr. C comes to know that Mr. A has complained on him, there is a possibility that Mr. C can commit or Mr. C can do some harm to Mr. A. So this type of situations should be avoided. Okay, to avoid these type of situations, there should be adequate safeguards in the company. That means the person who has given complaint, his identity should be kept privacy. Okay, his identity should not be revealed. So there should be adequate safeguards against victimization of the person who has utilized this Vigil mechanism. Hope that is clear. So that is section number 177, which deals with audit committee, right? Sorry, 174, not 174, 175, yeah, 177. And in middle section number 176 is there, na? This section number 176 we have discussed in chapter number 1. Okay, we have read section number 152 subsection 7 plus section number 164 plus section number 176 together. Okay, you can once go to the chapter number 1, and there we have discussed section number 176. Basically section number 176 will make all the actions that has been done by the director valid. Okay, if there is a contravention of section 160, sorry, not 164, 163. Okay, that means only one director, only one resolution has to be used for appointing one director. Okay, one director, one resolution. If two or more directors have been appointed by using single resolution, that appointment will become invalid, right? So if there has been contravention of this section 163, then the actions that has been done by such a director will be made valid by section number 176. This point we have discussed in chapter 1. You can once go there and see. Okay, let me just show you that also. Yeah, section 152 subsection 7, section 162, section 176. Okay, it is not section 163, it is section 162. So here we have discussed about section number 176 in the first chapter. Okay, next, moving to nomination and remuneration committee, and these sections, they are quite easy. See, section number 178, nomination and remuneration committee, stakeholder relationship committee. So for which companies nomination and remuneration committee is applicable? Same as audit committee, that is for listed companies, unlisted public companies having paid up share capital of 10 crores or more, having turnover of 100 crores or more, outstanding loans, borrowing deposit of more than or equal to 50 crores. Okay, that is the applicability of nomination and remuneration committee also. Who will be there in the nomination remuneration committee? That is composition. 3 or more non-executive directors, of which not less than half should be independent director. That is a composition of nomination remuneration committee. So what is the purpose of this nomination remuneration committee? That is objective. It will recommend for appointment and remuneration of directors and other employees. Okay, audit committee will recommend for the appointment and remuneration of auditors, whereas nomination remuneration committee will recommend for the appointment and remuneration of directors and employees. And another important point is, chairperson of company cannot chair nomination and remuneration committee, but he can be member. Okay, the chairperson of the company, he cannot be appointed as a chairperson of the nomination remuneration committee. However, he can be appointed as a member of the nomination remuneration committee. Okay, next, going to stakeholder relationship committee. Applicability: company which has more than 1000 shareholders or debenture holders or deposit holders has to mandatorily appoint the stakeholder relationship committee, and the chairperson shall be a non-executive director. Objective is to consider and resolve shareholder grievances. Okay, so this is section number 178, nomination and remuneration committee. Quite easy, right? Now moving to section number 179, which deals with powers of board. So what are the powers of board? First of all, power of board means these activities must be approved by board. Okay, only board of directors are having power to approve or to decide upon these activities. That is known as powers of board of directors, and these powers must be executed by the board of directors only in the board meeting. Okay, see, powers of board must be exercised in board meeting only, cannot be decided by resolution by circulation. Okay, these powers of board which we are going to discuss in section number 179 must be exercised only in the physical board meeting. Okay, they cannot be decided by way of resolution by circulation. Okay, RBC is not applicable for this. There must be these must be mandatorily discussed in the meeting. So what are these powers of board of directors? Let's see. Powers of board of directors: make calls on the shareholders. Now some companies, they will collect money on the shares on installment basis, right? Call 1, call 2, call 3. So to make these calls from the shareholders, board of directors have to pass board of directors have to decide, okay, by passing board meeting ordinary resolution. Basically, when to make the calls on the shareholders has to be decided by the board of directors in the board meeting. Next, authorize buyback of shares. In some situations, a company will buy back its own shares. So whether to buy back or not to buy back the share, this decision has to be taken by board of directors. Okay, this decision cannot be taken by the shareholders. Okay, the power to buy back is available with the board of directors. Next, issue securities. Okay, whether to issue new shares in the form of IPO or in the form of FPO, or issue any debentures, okay, that decision will also be available with the board of directors. Okay, next, whether to borrow money or invest money or grant loans or guarantees, even this power also lies with the board of directors, okay, to decide whether to invest the money of the company or to give money of the company as loan to someone. Okay, this power lies with the board of directors. Next, approve financial statements and board report. Even this power lies with the board of directors, which has to be executed in the exercise in the board meeting. Next, diversify company's business. Now let's say company is presently into manufacturing of tires. Now it want to diversify its business into manufacturing of car also. So this decision of diversification must be taken by the board of directors, not by the shareholders. Okay, next, approve amalgamation, merger, reconstruction, takeover. Okay, approval for amalgamation, merger, reconstruction, takeover must be given by board of directors. Next, rule 8 matters. What are rule 8 matters? Whether to give any political contribution, and whether to appoint or remove any key managerial personnel, and appoint internal or secretarial auditors. Okay, all these decisions, they has to be exercised by the board of directors in board meeting. These are the powers of board of directors. Okay, that is section number 179, which deals with the powers of board of directors. Now moving to section number 180, which deals with restrictions on powers of board of directors. See, restriction on power of board of directors means these activities which we are going to discuss in section number 180, they cannot be decided by board of directors. Okay, there is a restriction on power of board of directors with respect to following 4 decisions that we are going to discuss. Now if board of directors can't decide on these activities, means who will decide? Shareholders in general meeting will make a decision with respect to these 4 activities which we are going to discuss. That means another name that you can give for this section 180 is powers of shareholders or powers of general meeting. Okay, restriction on powers of board of directors means the board of directors cannot do these activities. If they cannot do, who can do? Shareholders can do. So we can call it as powers of shareholders or powers of general meeting. So what are these 4 decisions which cannot be taken by the board of directors but has to be taken by the shareholders in the general meeting? Let's see. That means must be exercised by shareholders in the general meeting. In the general meeting, to pass the resolution, special resolution is required for these 4 following decisions. What are they? First one, sell, lease, sell or lease whole or substantially whole of the undertaking. Now before understanding this, first of all we'll understand what is meant by undertaking. Now let's say there is a company. Okay, it is into various businesses, or it is having various undertakings, or let's say it is having various branches or business verticals. Okay, it is having various business verticals. Now company decided to sell off one of its vertical. In order to call this vertical as an undertaking, the requirement is that of the total income of the company, 20% income should come from this vertical, or of the total assets of the company 20% net worth belongs to this vertical. If any of these condition is satisfied, then we can call that vertical as undertaking. And if the company wants to sell or lease whole or substantially whole of the undertaking, then general meeting special resolution is required. Okay, so I guess now you understood what is meant by undertaking. Undertaking means a business vertical which exceeds 20% of net worth of the company or generates 20% of total income of the company. If any of the condition is satisfied, then you can call it as a undertaking. Now to sell that undertaking substantially whole, okay, sorry, to sell either whole undertaking or substantially whole undertaking. Substantially means of that undertaking, if you have decided to sell 20% or more, then that becomes substantially. See, substantially means 20% of the undertaking will become substantial. Now, if the company decided to sell not a substantial portion of undertaking, that means company has decided to sell undertaking, but it has decided to sell only 10% of such undertaking. In that situation, it doesn't become a substantial undertaking. So general meeting special resolution not required. Just by board meeting ordinary resolution you can sell off. But if company wants to sell substantial portion of undertaking, that means 20%, 30%, 40% of the undertaking the company wants to sell. So since it is a substantial portion of undertaking, general meeting special resolution is required. Okay. So if company wants to sell or lease whole or substantially whole of the undertaking, then it requires a general meeting special resolution. Next, invest compensation received from amalgamation in other than trust securities. Trust securities means government securities, safe securities. Treasury bonds will be known as trust securities. Now, company has received certain amount due to amalgamation. Now, it has decided to invest this amount in other than trust securities. In such a situation, it requires a general meeting special resolution. If it invests, if it wants to invest this amount in trust securities, that means in government securities, then general meeting special resolution not required. If it wants to invest in other than trust securities, then general meeting special resolution is required. Next, if company wants to borrow the money, okay, it wants to borrow the money in such a way that proposed borrowings, that means the new borrowings which the company wants to make together with the existing borrowings exceeds paid up share capital, free reserves and securities premium. In such a situation, general meeting special resolution is required. Let me tell you. Paid up share capital of the company is 20 crores, free reserves is 10 crores and securities premium is 5 crore. So total amount is 20, 30, 35 crore. And company is having existing borrowings, loans from bank. Okay, you can call them as existing borrowings of 30 crore. And company wants to additionally borrow new borrowing of additional 10 crore. If you calculate this, it will become 40 crore. Since it has crossed paid up share capital plus free reserves plus securities premium, for this additional borrowing, you will require general meeting special resolution. Okay, let's say company wants to make a new borrowing. The proposed borrowing is just 2 crore. So total borrowings becomes 32 crore. Now this 32 crore is within paid up share capital plus free reserve plus securities premium, that is within 35 crore. So general meeting special resolution not required. Just by board meeting ordinary resolution you can borrow the new borrowing. Hope you understood. Next, and in this borrowings, that is in the proposed borrowings plus, while calculating proposed borrowings and existing borrowings, you should not include temporary loans. What is meant by temporary loans? Any loan that you have taken with an intention to repay within 6 months, okay, which is repayable within 6 months, but include temporary loans raised for capital expenditure. Okay, for calculating the proposed borrowings plus existing borrowings, you should not include temporary loans. What is meant by temporary loan? Temporary loan is any loan which is repayable within 6 months, but you have to include those temporary loans which have been borrowed for capital expenditure purpose. Okay, next, give additional time to directors for repayment of debt. Let's say A Limited. A Limited has given loan to Mr. A, who is a director of company. Okay, A Limited is having two directors, A and B. It has given loan to Mr. A. Now, and this loan has to be repaid within 1 year. Okay, now 1 year has completed, still the director has not repaid the loan. So company wants to extend company wants to extend sorry extend time limit for repayment of loan. In this situation also, general meeting special resolution is required. Okay, in order to extend the time limit for repayment of loan for the director, you will be requiring general meeting special resolution. Okay, so that is section number 180, right? Yeah. Now moving to section number 181, which deals with charitable contribution. First of all, section number 181 is applicable to all the companies, both public and private companies. And the limit, what is the maximum amount of charitable contribution that you can make? Not exceeding 5% of average net profit of preceding 3 financial years. Let's say in the past 3 financial years, you got profit of, for the first year you got 10 crore, for the second year you got 15 crore, for the third year you again got 15 crore. Sorry, not 15 crore. Let's say you again got, for the third year you got 25 crore. Now if you add up all these, 25 plus 15, 20, 30, 40, 40, 50, average 3, some 16.9 crore, like this you will get. So average of past 3 years profit, okay, we have arrived. Of this 5%, 10% means 1.6 crore, 5% means 80 lakhs. So maximum amount of charitable contribution that you can make is 80 lakhs in this situation. So this is how you need to calculate. So the limit of maximum amount of charitable contribution is not exceeding 5% of average net profit of 3 preceding financial years. And if you wanted to give in excess of that limit, you can give subject to general meeting ordinary resolution. Okay, for this limit, for normal limit, if you are giving charitable contribution within 5% of net profit, then board meeting ordinary resolution sufficient. If you are giving in excess of that percentage, okay, if you are giving in excess of that 5%, then you require general meeting ordinary resolution. Okay, this is about charitable contribution. Next, going to section 182, political contribution. Political contribution means contribution given to any political party. Now if you see, government has not put any limit on the maximum amount of political contribution. Okay, you can contribute how much of amount you want to the political parties. Applicable to all companies except government companies and companies in existence for less than 3 years. Okay, for government companies and companies in existence for less than 3 years, then they should not give political contributions. Okay, limit. There is no limit for giving political contribution. How much amount you want, you can give, okay, by just passing board meeting ordinary resolution. And disclosure, you need to disclose the amount of political contribution that you have given in the profit and loss statement. Okay, you need to make this disclosure in the profit and loss statement. Next, section number 183, which deals with contribution to defense fund. Here also there is no limitation on the amount of contribution that you will make to the defense fund. Okay, limit is no limit, applicable to all companies. Disclosure in the profit and loss statement. Okay, almost similar points of 182. Okay, so these are the three sections which deals with contributions. Next, moving to section number 185, which is loans to directors. See, the general rule is you should not give any loans to the directors. Okay, the name of this section is loans to director, but in this section you will also we will also be covering loans, guarantees and security. Okay, these three aspects we will be covering. Let's say A Limited is having Mr. A as director. A Limited should not give loan to Mr. A. Okay, next, Mr. A is borrowing from some bank. Now, A Limited should not give guarantee to the bank on behalf of Mr. A. Okay, guarantee should not be given. Next, Mr. A is borrowing from the bank. A Limited should not give its assets as security to the bank on behalf of Mr. A's loan. Okay, so guarantee, loan, security for director is prohibited by the company. Okay, now the general rule is company should not give loan to any person who is in a position to control the same. Okay, now in this section number 180 we will be seeing 5 transactions. Okay, all 5 are loan, guarantee, security to director or some related parties of the director. Now of these 5 transactions, the first 2 transactions will be completely prohibited and the next 3 transactions will be permitted subject to certain condition. Okay, so we'll see. Transaction number 1, loan, guarantee, security. So if you see, you please clearly observe our diagram. There is our company. Okay, this is our company. Now our company should not give loan to its director. Okay, not allowed. NA means not allowed. Our company should not give loan to our company's director or partner or relative of such director. Okay, our company should not give loan to director or partner or relative of such director. This is the first point. Next, our company will be having a holding company. Okay, let's say our company is having a holding company, and in this holding company there will be a director. Okay, so our company cannot give loan to the director of the holding company also. However, holding company, it cannot give loan to its own director. Okay, not allowed, not allowed. Okay, not allowed, not allowed, not allowed. Next, our company might be having subsidiary and this subsidiary will be having director, right? So obviously subsidiary cannot give loan to its own director, but you need to observe here, our company, see, our company can give loan to the director of subsidiary. Okay, allowed. Okay, our company can give loan to the director of subsidiary company, but our company cannot give loan to our director. Our company cannot give loan to the director of holding company. Okay, hope this is clear. Same way, our company can also give loan to the partner relative of such director of the subsidiary. Okay, the same thing you have to apply, partner relative of such director. This is a first transaction. Okay, except one situation, remaining all are completely prohibited. Hope this is clear. Next, second transaction. In second transaction also, loan guarantee security will be involved. So our company name is Bala Limited. In Bala Limited, director is Mr. Bala. Okay, now Mr. Bala is partner in a partnership firm by name Bala and Co partnership firm. Okay, and Bala is having a relative. Okay, he is Bala's relative. Bala's relative is also partner in a partnership firm by name Relative and Company, Relative and Co partnership firm. Now this Bala Limited is there na, it should not give loan to Bala and Co firm. It should also not give loan to Relative and Co firm. This is the transaction. Okay, completely prohibited. Hope this is clear. Okay, you can understand this transaction by going through the diagram. So the first two transactions are completely prohibited. Now coming to the third transaction. Third transaction is allowed subject to certain conditions. Let's see. Loan guarantee security. Here also you will be having three transactions only. Now this third transaction, it will be permitted if you get general meeting special resolution and utilize borrowings for principal business activity. First of all, let us see the scenario. Bala Limited is the company. Now in the Bala Limited, Bala is the director. Okay, now this Bala is also director of Krishna Private Limited, and Bala is also member of Hari Private Limited. Now in this situation, Bala Limited is there na, this Bala Limited, it can give loan guarantee security to the Krishna Private Limited. It can also give loan guarantee security to Hari Private Limited, provided in Bala Limited you get a general meeting special resolution, and this Hari Private Limited and Krishna Private Limited utilize those funds for the business purpose. Okay, for the principal business purpose. In that situation, that loan guarantee security will be allowed. This is the transaction 3, which is not prohibited. Okay, it is permitted subject to general meeting special resolution and utilization of the funds for the principal business activity. And there is one particular exception. In the first transaction and second transaction, we have seen that company cannot give loan guarantee security to the director, right? But there is one exception. Company can give loan guarantee security to the managing director or whole-time director if such loan guarantee security is as part of conditions of service extended to all other employees. Okay, first of all, you already know that managing director, whole-time director, they are employees of the company, right? They are executive directors. Executive means they are employee of company. Now company, as per company's policy, it can give home loan to its employees, or it can give some personal loan at so and so interest rate to its employees. So on same conditions, on those same conditions, it also giving such a similar type of loan to the managing director or whole-time director. Okay, which will be generally given to normal employees. So in that situation, it is permitted. Okay, company can give loan guarantee security to the managing director or whole-time director as part of a service extended to the all other employees. Okay, that is the exception. Next, transaction number 4. This is also permitted subject to general meeting special resolution and utilization of the funds for the principal business activity. Now, loan guarantee security. Body corporate whose not less than 25% voting power exercised by directors of lending company. What is this? Bala Limited, it is a lending company. Okay, now in lending company there is two directors, director B, director A. Okay, director B is having voting power of 15% in Krishna Limited. Director A is having voting power of 20% in Krishna Limited. So if you add up these two, 15 plus 20, it will become 35%, which is exceeding 25% voting power. Now directors of lending company are having more than 25% voting power in the borrowing company. In this situation, loan can be given by Bala Limited to Krishna Limited, provided general meeting special resolution is passed in the Bala Limited. Hope you are clear with this. Next, transaction number 5. This is also same. Permitted subject to general meeting special resolution and utilization of the funds for the principal business activity. Loan guarantee security. Body corporate whose management is accustomed to act as per the instructions of the lending company's director. Now see. Bala Limited. Bala Limited. Okay. In Bala Limited, Mr. B is director. Okay. There is also another company, Hari Limited. Now, Hari Limited will do whatever is told by Mr. B. That means Hari Limited has become accustomed to act as per the directions of the director of lending company. Okay, in this situation, Bala Limited can give loan to Hari Limited provided it gets a general meeting special resolution in its general meeting. Okay, by the shareholders. This is a requirement. Once I will read this point, you will understand. Body corporate, that means Hari Limited, whose management is accustomed to act as per the instructions of the lending company's director, that means Mr. Bala. Okay, as per the directions given by Mr. Bala, the management of Hari Limited will act. In this situation, Bala Limited can give loan to Hari Limited provided general meeting special resolution is passed in the Bala Limited. Okay, that is section number 185, giving loan guarantee security to the directors, right? Next, moving to section number 186. Even section number 186 is also related to loan guarantee security and investment by the company. Another point is added. Now you can feel that section number 186 and section number 185 are similar, but no, there is some difference. If you see, section number 185 speaks about only loan guarantee security. Section number 186 also speaks about investment. Okay, that is the first difference. Next, section number 185 speaks about loan guarantee security to directors. Okay, whereas section number 186 speaks about loan guarantee security investment in any, okay, in any party or to any party. Okay, not only directors, entire people will be covered in section number 186. Okay, that is a difference. Now if you see, I'll bifurcate this section 186 and I will give you more clarity. If you bifurcate this section 186, loans guarantees security given to persons specified under section 185, that means directors and relatives of director. Okay, if you are giving loan guarantee security to director or relative of director, then it will be governed by section number 185. Okay, this is the only situation which will be governed by 185. Next, if you are giving or if you want to give loan guarantee security to others, okay, that means other than parties specified in section 185, or if you want to make investment in parties specified under section 185, or if you want to make investment in others, then all these three scenarios will be governed by section number 186. Okay, so these are the scenarios where 185 is applicable and scenarios where 186 is applicable. Now, generally, to grant any loan, guarantee, security or investment, board meeting unanimous resolution is required. Okay, in section number 185 we have seen that the first two transactions are completely prohibited, and for remaining next three transactions general meeting special resolution is required. But now here in section number 186, if you wanted to give loan, guarantee, security, investment to any party, board meeting unanimous resolution is required. Unanimous resolution means all the directors of the board of directors should approve. Okay, if there are 10 directors, all the 10 should approve. Okay, not even single should reject. That is known as unanimous approval. Okay, so in order to grant loan, guarantee, security, investment as per section number 186, you will be requiring unanimous approval of a board of directors. Next, if existing loan, guarantee, security, investment and proposed loan, guarantee, investment, security is more than 100% of free reserve plus security premium, or 60% of paid up share capital, free reserve plus security premium, whichever is higher. In this situation, for the proposed loan, guarantee, investment or security, you will be requiring general meeting special resolution also. Have you understood? Let me tell you. Normally, okay, for giving loan, guarantee, security, investment to others, you will require board meeting unanimous resolution. But if existing loan, guarantee, security, investment along with proposed loan, guarantee, security, investment, okay, these two taken together, if they exceeds 100% of free reserve plus security premium, or 60% of paid up capital plus free reserve plus security premium, whichever is higher. Okay, if they exceeds, then for the proposed loan, guarantee, security or investment along with board meeting unanimous resolution, okay, you will also require general meeting special resolution. Okay, board meeting unanimous resolution is mandatory. Okay, whether they exceed the limit or they don't exceed the limit, board meeting unanimous resolution is mandatory. But if existing plus proposed exceeds the limit, then along with board meeting unanimous resolution, you should also get general meeting special resolution. Hope that is clear. And there is exemption from this special resolution if you are giving loan, investment, guarantee, security to wholly owned subsidiary or to a joint venture. Okay, if you are giving this loan, investment, guarantee, security to wholly owned subsidiary or the joint venture and the amount is exceeding the limits, then you need not get general meeting special resolution. Just board meeting unanimous resolution is sufficient, because you are giving it to your subsidiary company only. Okay, your wholly owned subsidiary only or your joint venture only. Okay, next, additional requirements. If you are giving this loan, security, guarantee or investment in such other party, you should make sure that you are not defaulted in payment of deposits or interest. Okay, company, it has taken deposits from public. Okay, it has taken deposits from public, and you are giving loan, guarantee, security, investment to other party. In this situation, you should ensure that you have not defaulted in payment to the deposit holders, because on one side you have defaulted for paying the deposit holders. Okay, there is certain amount due to deposit holders, you are not paying it. And on the other side, you wanted to give borrowing loan, you wanted to give loan guarantee security investment. How it will be possible? First of all, you repay these deposits, you repay the interest on deposits. After that, you give loan guarantee investment security. Okay, so you should ensure that not defaulted in payment of deposits or interest. Same way, not defaulted in payment of statutory dues. You first of all repay the statutory dues, income tax, GST, TDS. Okay, you repay them. After that, you, if you have money, you give loan guarantee investment security. Okay, next. Return on investment should be more than government yield rate. Now you are giving a loan to some third party, you are making some investment, so the rate at which you give the loan, it should be more than government bond yield rate. Let's say government bond yield rate is 9%, then the loan that you give should be at more than 9%, or the investment that you make should earn more than 9%. Okay, next. You should maintain the register of all loans, guarantees, securities, investments given. Okay, those are some additional requirements. And section number 186 is not applicable to government companies engaged in defense production. Unlisted government companies obtained approval from respective ministry. For these two types of companies, section number 186 is not applicable. Okay, next, section number 187. What is this section number 187? Basically, section number 187 says that whatever the investments that the company makes, they must be held in the name of the company. See, investments of the company must be held in the name of the company, in its own name. Okay, they should not be kept in the other's name. But there are exceptions to this. There are 3 exceptions. What are they? Exceptions. That means in these exceptional situations, even though that investment belongs to the company, it can be kept in the name of third party. What are those exceptional situations? Securities deposited with bank for collecting income or for facilitating transfer. Okay, now let's say for example, company has invested in shares of some other company. Okay, now those shares should be in the name of the company because those investments belong to the company. But to collect income on those shares, company has assigned this collection of income job to some bank, or company wanted to sell those shares, so company has assigned the job of finding a buyer for those shares to the bank. In this situation, what the company can do is they can keep those shares or the securities or the investments in the name of the bank, because bank has been given the duty of collecting income on those securities, or bank has been given the duty of selling those shares, finding buyer for those shares by the company. Okay, in this first exceptional situation, those securities can be kept in the name of the bank. Next, deposited with third party as security. Let's say a company has taken a loan of 10 crore from the bank. Now for this loan, company has kept the shares, the investments that it has made as a security, or the land of the company has been kept as a security. In this situation, it can be kept in the name of the bank as a security. Okay, next, holding in the name of depository. Depository means in India we are having 2 depositories, NSDL, CDSL. Now if let's say the shares are listed in the company, okay, A Limited. Okay, A Limited has invested in the shares of B Limited. B Limited is a listed company. Okay, if it is a listed company means its shares will be listed in the stock exchange. Now all the shares which are listed in the stock exchange, they will be in a dematerialized format, right, in the demat account. So these dematerialized shares will be maintained by NSDL and CDSL, right? So in the books of B Limited, it will be written that all the shares which are available for public are in the name of NSDL and CDSL. Okay, if you see in the books of the listed company, for the shares which are listed on the stock market, the shareholders, the names they will write is NSDL and CDSL, because instead of writing the name of all the shareholders, they'll just write NSDL and CDSL. At the end of the year, Okay, they will take the names of all the shareholders as on 31st March, because for the shares which are listed on the stock market, the shareholders will be changing continuously, right? From a minute to minute change, shareholders will change, because many share transfers will happen if the shares are listed on the stock market. So in order to avoid the complexity, what the listed companies will do is, for the shares which are listed on the stock market, for that particular shares, in books of the company, it will mention CDSL or NSDL as the shareholder. So here if you see, for those shares are in the name of the NSDL or CDSL, right? So this is also another exceptional situation. Okay, holding in the name of depository. And company should maintain register regarding these security. Okay, company has to maintain register of these securities. Next, moving to section number 188, which is related party transactions. Now if you see, this section is very easy. Most of the people feel that it is very complicated, but it is most easy section if you can bifurcate it. In this section we will be learning four aspects. Okay, the first aspect that you will be learning is who is related party of company. Okay, for the company, who will become related parties, that is the first point you will be learning. Next, what transactions are covered. Okay, first you have learned who are related parties of company. Next you will learn if you enter into which transactions with the related party, they will become related party transactions, that is transactions covered. Next, for entering into this transaction, which approvals are required. Okay, what approvals are required. Finally, miscellaneous provisions. So these four aspects we will be covering in this section number 188. First we will see who is meant by relative of the company. So who is related party? There is a list, eight people list. Let's see. First of all, director or his relative will become relative of the company. Okay, key managerial personnel or relative of key managerial personnel will become relative of the company. Key managerial personnel means managing director, whole time director, manager, CEO, CFO, CS, all these people are relative of the company. Next, firm in which director or his relative is partner. Okay, then such firm will also become relative of the company. Next, private company in which director, manager, relative is a member or director. Okay, any private company in which the member, the manager, director or relative of the company is a member or director, then such company will also become relative of the company. Hope this is clear. Next, public company in which director, manager is a director and holds along with his relatives more than 2% of the paid up share capital. In such situation, such a public company also becomes the relative of our company. Next, any body corporate whose board of directors accustomed to act as per directions of director or manager. Okay, in our company there is a particular director, Mr. A. Now based on the directions of Mr. A, the management of some other company will act. Okay, the management of some other company has become accustomed to act as per directions of our director or our manager. In such situation, such other company will also become our relative. Okay, next, person on whose advice director or manager accustomed to act. Now there is some other person. Okay, now our director, our manager are accustomed to act as per the directions of such other person. In such a situation, such other person will also become relative of our company, because our director and manager is acting as per the directions of such person. Okay, next, subsidiary, holding, associative and subsidiary of holding to which it is also subsidiary and venture of company. Okay, all these also will also become our relatives. What are they? Subsidiary, holding company, associate company and subsidiary of holding company to which it is also subsidiary and venturer of our company. Okay, all these will become relatives of our company. Hope that is clear. So this is the definition of relative. Okay, all these people will be covered under the definition of relative. Yeah, next. So these are related parties. Now let us see the transactions that are covered. Okay, if you enter into these transactions with the related party, they will be known as related party transactions. Let us see the transactions covered. There are 7 transactions. First one, sale or purchase of goods or material. Okay, if you purchase or sell any goods or material from these related party, then the transaction becomes a related party transaction. Next, availing or rendering of services. Okay, if you take any service or give any service to those related parties, that transaction will also be related party transaction. Next, selling, buying, disposing of property of any kind. Okay, if you sell or buy any property with those relatives, then that becomes related party transaction. Leasing of property, appointment of agent for purchase, sale of goods, services, property. Related parties appointment to office or place of profit. Okay, office or place of profit means employee will be office or place of profit. Basically you are giving certain income to that person by appointing him in your company. Okay, if you have entered into any such transaction wherein you have appointed him in your company as a employer, director, or any place of profit, then that also becomes a related party transaction. Next, underwriting. Okay, so if you enter into these 7 transactions with those related parties, then that transaction becomes related party transaction. Now for this related party transaction, which approvals are required? Let us see. If the transaction is in ordinary course of business and at arm's length price, then no approval is required. Okay, if the transaction that you have entered is at arm's length price means the price at which you will enter the transaction with normal unknown third party, that is known as arm's length price. If you are entering into transaction with the relative also at such a price, then it will be known as arm's length transaction. Okay, so for such arm's length transaction, no approval is required. Next, related party transaction not at arm's length price. If the related party transaction is not at arm's length price, then you will require board meeting ordinary resolution. Next, special contract under rule 18, you will require board meeting ordinary resolution and general meeting ordinary resolution also. So what are these special transactions? Special transactions, they are nothing but these 7 transactions only exceeding certain limits. Let me tell you. Okay, sale, purchase of goods or materials more than or equal to 10% of turnover of company, then the transaction becomes special transaction, or special contract under rule 15. Then for such contract, along with board meeting ordinary resolution, general meeting ordinary resolution also required. Okay, availing rendering services whose value is more than or equal to 10% of turnover. Just a second, I'll just check whether it is only more than or more than equal to. Just give me a second. Section number 188, right? I guess it will not be there here. I'll just go to ICI's website. Just a second. I guess it is more than or equal to, only just for confirmation. Yeah, 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 10% or more, equal to or more than only. So it is more than or equal to. Next, selling, buying, disposing of property value worth more than or equal to 10% of net worth. Okay, since it is asset, you will be calculating on net worth. Next, leasing of property more than or equal to 10% of turnover. Next, appointment of agent for purchase, sale of goods or services more than or equal to 10% of turnover. Okay. Next, related parties appointment to office where such related party receives more than or equal to 2.5 lakh per month. Next, underwriting more than or equal to 1% of net worth. Okay, if these transaction values exceeds these limits, then such contract will be special contract under rule 15, and for such special contracts you will be requiring general meeting ordinary resolution along with board meeting ordinary resolution. Hope that is clear. Next, miscellaneous, disclose all related party transactions in the board report. Okay, all these related party transactions you must disclose them in the board report. Okay, so this is section number 188. Those are the related parties, and if you enter into these transactions with those related parties, you will require the approvals, and those related party transaction must also be disclosed in the board's report. Simple, right? Next, section number 184, which deals with disclosure of interest by directors, a simple section. Now, if directors are having any interest, this interest can be financial interest or managerial interest. Financial interest means you have invested in the company, you have given loan to the company, that is known as financial interest. Managerial interest means you are a partner or you are a director or you are a key managerial personnel of that particular company, then that is a managerial interest. If you are having any interest in the companies, in other companies, you must disclose them. See, interest can be of two types: financial interest, holding shares, capital in the firm or assets in the HUF. Managerial interest means directorship of company, partner of firm or proprietorship of proprietorship. That is managerial interest, financial interest. So all your interests you need to disclose under section 184. So these disclosures, they are two types: general disclosures, specific disclosures. General disclosures, you need to give these general disclosures in the first board meeting in which you are participating as director. Okay, all the interests, whether it is a financial interest or a managerial interest, you need to disclose it in the board meeting. That is a general disclosure. Okay, in the first board meeting in which you are participating, and also at first board meeting of every financial year. Okay, after you have become the director, if you are after you have become the director, the first board meeting you are going to attend in the company, in that board meeting you have to disclose. And also in each and every financial year, in the first board meeting you need to disclose the interest. And also when there is a change in the disclosure that you have already given, in during such a change also you need to again disclose. Okay, at the time of such a change also again you need to disclose the interest. This is general disclosure. Next, specific disclosure, when you have to give this specific disclosure when a contract comes for discussion at board meeting, and such contract is with a body corporate in which director is holding 2% or more of its share capital, or that contract is with a body corporate in which director is a promoter, CEO or managerial personnel, or that contract is with a firm in which director is a partner or member. Okay, now in the company, a resolution has come to the board of directors. In that resolution, the contract or the parties involved is any of these three. In such situation, director has to disclose that he is interested in this resolution, so he will not participate in this resolution. Like this he need to disclose. Okay, this point we have already discussed earlier, right? And see, do not participate in discussion of such contract in the board meeting. Why he should not participate? Because he is interested in such contract. Okay, next, section number 189, which deals with register of contracts or arrangements in which directors are interested. Okay, now directors under section 188, they will disclose their interest, right? Sorry, not under 188, 184. Yeah, under 184 they will disclose their interest. So all those disclosures which have been made by the directors must be written by the company in a register for documentation. So details to be entered in the register are disclosures under section 184 and related party transactions under section 188. They need to be recorded. And the format will be format MBP4. Okay, the format in which the register has to be maintained is form number MBP4. Next, they should be maintained in a chronological order. Chronological order means date wise you need to maintain. Next, register shall be placed at board meeting. At each and every board meeting, this register of section 189 should be placed and signed by all the directors, and also to be produced at AGM at the annual general meeting. Also this register must be kept. Next, you have to keep this register at registered office in the custody of company secretary or any other authorized person. Okay, so this is with respect to the register of contracts and arrangements, that you can call it as a section 189 register. Okay, in section 189 register, you will maintain details of disclosures that has been made by the directors under section 184 and also all the related party transactions under section 188. Okay, next, section number 190, contract of employment with the managing director or the whole time director. I have already told you while discussing chapter number 2 that managing director and whole time director are employees of the company. Now there should be a contract of employment between the company and the managing director or the whole time director. So this copy of a contract with managing director or whole time director exists. Okay, there is a copy of contract. In such situation, keep written copy of such contract at the register office. If the copy of contract doesn't exist, okay, doesn't exist, in such a situation, maintain written memorandum setting out the terms of the appointment. Okay, since there is no contract, you need to maintain a written memorandum. In that memorandum, you need to write down all the terms and conditions of the employment of the managing director and the whole time director. Okay, and can be inspected by members at any time. This contract can be inspected by members at any time. Next, section number 191. Section number 191 deals with payment to director for loss of office, etc., in connection with transfer of undertaking property loss. Now, if you remember, section number 202 in second chapter, we have discussed about payment of compensation for loss of office to managing director and the whole time director. Here we will be discussing the payment of compensation for loss of office to remaining all other directors. Okay, that is the difference between section number 191 and section number 202. See, applicability: all directors, all companies, when on transfer of whole or part of undertaking or property of the company. Okay, if there is a transfer of whole or part of undertaking of the company, and because of such transfer the director is losing his position, or all or any of shares of the company. Okay, because of these two, director loses his office. In such a situation, make a disclosure under rule 17 to members and general meeting ordinary resolution. By passing general meeting ordinary resolution, you can pay compensation for loss of office to the directors. However, this is not mandatory. Okay, and you will not give compensation in the following cases. What are the situations? Similar to that of section 202. Company defaulted in payment of public deposits or interest, defaulted in payment of debentures or interest. See, on one hand you have not repaid the deposits, on one hand you have not repaid the debentures, and on the other hand you wanted to pay compensation to the directors. How will it be possible? First of all, repay the deposits, repay the debentures, then you want, if the amount is remaining, you can pay the directors the compensation. Okay, next, any liability to public financial institutions. Next, statutory dues and taxes. dividend on preference shares. Okay, if any of these are pending on part of company, then company cannot give compensation to the directors on their loss of office. Okay, next section number 192, restriction on non-cash transaction involving directors. What is this non-cash transaction? Let me tell you. A Limited. In A Limited, Mr. B is director. Okay, A Limited is having a land worth some 10 crores. B Limited is also having a land worth some 10 crores. Okay, now, or let's say A Limited is having a land worth 50 lakhs. Okay, Mr. B is having a car whose worth 50 lakhs. Now, Mr. B wanted to purchase this land. So, A Limited sold this land to Mr. B. Mr. B, instead of giving cash, he has given this car worth 50 lakhs to A Limited. So, this is known as non-cash transaction. Whether it is permitted? Yes, it is permitted, but subject to the general meeting ordinary resolution. Okay, parties involved: director acquires from company, holding company, subsidiary or associate, or company acquires from director. Okay, company and the director, they can enter into non-cash transactions subject to general meeting ordinary resolution. That means after taking approval from the shareholders, you can enter into non-cash transactions. Okay, next section number 193, the final section, contracts by one person company. Parties involved between one person company and its sole member who is also a director. Okay, such contracts, they should be preferably kept in writing, and if not in writing, list the terms in memorandum or enter in the minutes of next board meeting and inform to registrar within 15 days of approval by board of directors. Okay, this is section number 193. By this, we have completed all the 20 sections of third chapter, meeting of board and its powers, right? So by this, we have completed all the chapters related to the directors from the Companies Act. In the next class, we'll be starting with a new chapter. Okay, until then, take care, bye bye, see you.